Hello guys, it's Max here from Daily Market Movements. Before I start this video, I just want to make you all aware of our trading signal group that we have here at Daily Market Movements. If you want to receive signals from myself and the team here at Daily Market Movements, then you can do so by visiting our website www.dailymarketmovements.com. The website link is below, and you can purchase our signal package and join our group for a very small fee of $199 for a year's membership. So in front of me is the gold futures chart, and as you can see today, we have had yet again a negative day. We are trading in the red, and we have lost just around 3 to 4%, and we are trading at that 15.16 level. Just an hour ago, we did see a bounce exactly off the 200-day EMA, so it is offering some support as we have bounced back off that level there. But this is a bit of a dilemma now for this pair for this metal, due to the fact we have fallen below the bottom of the uptrend, which has been so supportive since July 2019. So now it's a very crucial stage for this precious metal, and the next development is crucial to determine where it goes next. As you can see, as I just mentioned before, we have bounced off that 200-day EMA, but if we do manage to break below the 200-day EMA, this is a very bearish sign, and it will probably send gold back towards that 1300 level, where we did have a bit of noise around this period here in May 2018. My bias, as long as we're trading above the 200-day EMA, my bias still remains the same for gold. I'm still long-term and short-term bullish, although we have had an extraordinary week. And if you'd have asked me a week ago that we'd be touching the 200-day EMA on Friday, I would have said that you're crazy, basically, because I didn't think it would happen. But it's happened. I didn't think that the world would be where we are today with the coronavirus, but it has happened. But I would just look now for gold to get a bounce off the 200-day EMA and hopefully break back above into the uptrend line, and then trade back towards that 1600 level and break back above there, and then from there then we target the 1700 level. However, if we don't and we do see a break below, once we're trading at around the 1480, once we're trading below the 1480 level, that's when I then become a seller of this market. As that would confirm a breakout below the 200-day EMA, and that's where I will then target the 1400 level, and then after that I will then target the 1300 level, as I believe we will get there. As I mentioned before, we still have quite a lot of noise around there, so that should be rather supportive. In terms of the RSI, we are approaching the oversold, but we're not quite there yet, so we could still go lower, which could confirm the breakout below the 200-day EMA. So now it's kind of just sit on my sideline and maybe place a very small buy trade off the 200-day EMA. However, I wouldn't trade big, because if it does break, it's going to probably drop very quick. So next week, Monday, Tuesday and Wednesday, just see what it does around this area here with the 200-day EMA. So all in all, if you're not in this trade as of yet, I would place a very small buy above the 200-day EMA, but have a very tight stop below it. And if it does break below the 200-day EMA, then I'm a seller below the 1480 level, targeting the 1400 and the 1300. But if we can break back above the bottom of this uptrend and back above the 1600 level, then I'm a buyer targeting the 1700 level mark.